What is up, Discourse Syndicate? Jay coming at you with a macro and HEX TA video. So that's what you can expect. That's what we're going to cover here. A much more condensed version. And we want to start this as a new series, so you can expect that on the channel and on the network as well. Soon, we did a pilot of it and a test of it today. It went really, really well. So I think we're going to end up rolling this out as a show here soon. So I just wanted to give you a condensed version of that and put it all together for you in case you just want cliff notes. Okay, so let's take a look at macro outlook. Macro matters. Knowing where the entire market is matters. Now, within cycles, it's very hard to tell like what and when comes next. Like the exact dates, picking the exact tops is very, very hard. You know, Richard's done it a few times, and kudos to him. You can't expect to have a perfect track record with calling tops. Now, the reason why he's so good at it is because he sees the other pieces that are all pointing towards the same story. Okay, and over time, you can get really, really good at this because we're not trying to figure out what comes next and when, is just where are we at right now? Okay, so where are we at? We are in a trader's market right now. We're not in an investor's market. So investors are getting slaughtered right now from Michael Burry, who they literally make the movie The Big Short after him. He runs Scion Capital, however you want to pronounce it, asset management. And according to their most recent 13F filings, which they have to file about their positions and holdings, he has eliminated his shorts on ARK, Tesla, and US Treasuries, as well as I think at one point he tried to short cryptocurrencies and got absolutely wrecked. Now, he's gotten consistently wrecked all year, shorting Tesla. And then he recently did ARK and Treasuries and got wrecked on those as well. It doesn't tell you like how much he lost or, you know, what exactly the position, you know, how the position ended. But I can assure you that I'm pretty sure he got wrecked, right? And he's basically like threw up his hands and just said, I don't know what to do, okay? And it's just simply because he is an investor and he's usually really early. So he was right this summer when he started calling for like, this is it, this is the top. It just, you know, they came out with the money printer and said, no, bro. And they extended what we're currently in. They extended the cycle that we're in. Okay, so why do I say it's a trader's market versus investor's market? It's not just this piece, this Michael Burry piece. There's plenty of pieces. Okay, because where inflation is, meaning that on the ground, in the streets, you felt the inflation with your turkey prices for Thanksgiving. You feel it with your home cleaning goods. Everything is raised this year. There was over a dozen companies that announced by July that they were raising rates right now. Prices of goods. This is Procter & Gamble, which owns 80 different companies that all have to do with household cleaning supplies. All the way to meats. We've heard about those shortages, skyrocketing on pork, blah, 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 all since, you know, Corona happened, right? So there is inflation, real inflation in the streets. Now, depending on what model you're subscribing to, CPI will tell us that it's 6.2%. And if we go off of a model that they used to use in the 80s, which was the old CPI, it's almost 15%. So somewhere in between there, right? Just depends on what model you want to look at. Inflation is very high. People know that they're struggling to find yield. They're struggling to find return. And the issue with that is the longer that goes on in a cycle, the more destructive and the more desperate people get to make yield, which leads them to make dumber and dumber decisions. And so what I feel like an analogy of where we're at right now in the market is we're literally down the side street in Vegas at some like, you know, late night little sideshow of a casino gambling. Right? Like we're literally right in the alleyway, you know, with a little roof over our head, gambling in the alleyway. That's where I feel like we're at right now. And you can see this, there's other echoes of this same trend, let's call it. And that is with the explosion of NFTs and from people just jumping from NFT to NFT to NFT, NFT, right? And that's also with the explosion of IDOs and initial launches happening within the crypto space. Everyone wants in, everyone wants an allocation, everyone's fighting for allocation because they know that first in advantage, and they're looking to, a lot of people are looking to make a quick return. Some are looking at a longer term play, of course, always the case, but there's just so many more players now on the hunt for yield that is making these allocations super oversubscribed, okay? And that's a problem. And so we've got everyone hunting for yield, right? And I've been talking about this for quite a while on Crypto Junkies and various other outlets, right? I got a macro newsletter that I write, which is, you know, neither here nor there, but it's something that we've been consistently covering. So inflation is the problem. Inflation is the lead. Okay, why is there inflation? Well, let's unpack this real quick. When 40% of the US dollars have been printed in the last 18 months, you've got a problem. They've now, you know, passed and printed trillions of dollars into the ecosystem. Super cheap dollars. Everyone's getting cheap dollars, right? Which is why when people first started getting the stimmy checks and the extended unemployment benefits, you notice how nobody wanted to go to work? Well, because it was cheaper and better to stay home. But now that the extended benefits have mostly ended and the party's kind of over on that easy money train, well, unemployment has gone down. The filings have gone down. So let's look at that. Here it is right here. So that's what you're looking at right here, is claims have gone down, okay? The lowest number of Americans filing for first-time jobless benefits since 1969. And extended, everything's down. Everything's pretty much down, right? These are the COVID highs, yeah? So everything's pretty much down. So yet we still have this shortage in the workforce, right? Why is that? Well, because people aren't actually working jobs. They don't want jobs because they realize that it's a fruitless endeavor with what they're up against right now. If everything costs more to buy and you're gonna go to work for $15 an hour, how are you to get ahead? Well, now that's where we introduce NFTs and crypto and AVEX and all this stuff that just creates FOMO because everyone's trying to get rich quick because they have to, they need yield, they need a return on this money. They gotta, they can't go get a job and they want, so they justify it in any means possible to stay at home and be doing what they're doing, right? So that's what happened. We printed too much money in a short amount of time, gave people too much of an incentive to stay home. So they did, and they found themselves at the casino. And the casino right now is traditional markets, yes, but largely it's the crypto market, which is why everyone's got involved. Cubans now, balls deep, Gary V's balls deep, everybody that was, big traditional market guy is now a crypto expert. They're an NFT expert. I mean, God, look at it, right? So that is a signifier of a top. It 100% is. So in 2017, it was like, the Uber driver telling you about Bitcoin. That was the top. It was the CME and CBOE listing the very first Bitcoin futures. Well, now it's like deja vu all over again. Now your taxi cab driver's talking about NFTs and we're talking about creating crypto ETFs, Bitcoin ETFs, right? That's the big push right now. Regulation is now coming quickly. We got Hillary Clinton on national television, unpromoted for twice in 1 week, I think, talking about how Bitcoin's the greatest threat to the financial markets and to the dollar as a whole, which is absolutely insane. So yeah, we've got quite a bit now that is all starting to show itself. All right, so here's the rest of the U of M survey data. Let's cover some of this. What is overall sentiment like? So here's the consumer sentiment index, conditions index, expectations index, all down. So they're expecting it to get worse. Expectations are low, right? Here's another look at that. Consumer goods, the condition of household buying, vehicle purchasing, and large household durables, down, right? Yeah, I mean, we don't got to zoom in. You see it, down. Okay, expectations on inflation, up. Simple. Again, here's what I was talking about earlier. So here's your CPI, and here's the alternative CPI based off the old model used in the 1980s is close to 15%. Just depends on what you're looking at. If we look at purchasing power of main currencies against gold from 1971 to 2020, right? New home sales data, the big thing to look at here is there's a divergence between home sales and price. Okay, and then prices are hitting all-time high at the same time. Okay, so there's your macro. People don't have a positive outlook on what's going on. And the market hasn't picked a direction, right, in terms of sentiment. And if you think that Jerome Powell and the Fed has control over this inflation, then you're wrong. You're sadly mistaken. They do not. And now they are in direct conflict with mainstream media who's trying to push the Omicron or whatever it's called variant to push fear. They are now battling against that to try and taper fears so that they can get inflation back under control and get sentiment back under control. Because all of this headline hunting, you can get sentiment from many different places. Now, if we start to look at the markets itself, well, here's our top. November 8th it's November 10th was our top. But look at what's missing. Momentum. This is a momentum indicator. It's an oscillator. Okay, so momentum was not there. Notice this. You see the big green island here? Easy way to think about this: green island, red island. Green is up, red is down. This is our midline right here. And so the darkness of the color depends, it dictates the strength. And so when we start to get thinner, that means that it's weakening. And then the size also shows that it's weakening on this. This is called a histogram. So on our all-time high move for Bitcoin, there was no momentum there. And RSI was already turning over, meaning going down, diverging. So price was going up, oscillator was going down. Okay. So how can that move be sustained? Well, it can't. And then what came next? Bang. So we had all of that happening, right? We had the indication there that the market was weak going into Thanksgiving. Thanksgiving is notoriously a bad time for crypto. And then what do you know? All the news followed. So the FA followed the TA. You know, it's like, what came first, the cart or the horse, right? So what you focus on, fundamentals or technicals? I say technicals, but you know, you can get a great idea of sentiment from fundamentals. And usually the headlines support, or we tend to find that to support our bias, right? Because there's just as many good headlines as bad usually. But when there's a significant move, it's always like, example, S&P dumped, and it was blamed on Omicron, whatever variant, okay, the new variant. And it was blamed on that immediately. Like that was the headline, right? And that's what they did Friday going into the weekend, and they wanted that, right? And that was our Thanksgiving weekend, was big, scary new variant, right? And so they did that, and markets dumped, which is what markets do. So that's sentiment right there. That is your, crash course on sentiment and just overall what occurred. So we had a thin market that hadn't, a weak market, no real volume, no momentum, that hadn't picked sides yet, going into the holidays. Nobody's around on the holidays. Bang, perfect time to sell off. Bitcoin historically does bad on Thanksgiving. There you go. There's your whole story wrapped up in a bow of what just occurred. All right. So I hope you're still with me. 12 minutes in. Okay, not bad. Now, let's turn to HEX and let's start to talk about some TA. Let's go to weekly. A great place to start. Ignore the lines, ignore the stuff. Okay, we're going to get through it one by one. A great place to start is on a higher time frame. Usually monthly, but for altcoins like this, I think weekly is just fine. And so we just turned over a new month, right? December. And so what are we starting to see here? Let's look at some basics. Let's start up here on the chart. Now, before we do that, let me outline some real simple things. Uptrend. Downtrend. Holy crap, that is bad. My mouse. I blame it on my mouse. Let's try this again. Downtrend. Okay, so what is this actually doing? This one's really bad too. Let's quickly fix that. Boom, 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 boom. Okay, we have a series of higher highs, HH, higher lows, HL. So the high keeps getting taken out, and the low does not get taken out. So the low keeps printing a higher low and a higher high. This is an uptrend. Basic definitions. This is a downtrend, the exact opposite. LL, LH, lower lows, lower highs. So we hit this new low, then this doesn't take out, right? Previous. Then this doesn't take out previous while we're still painting lower lows, right? That's it. That is market structure, the basics of market structure, rather. Okay, let me get rid of this. We're going to talk about some other really basic stuff as we go along. That is my whole goal for this, is basic stuff. All right, so what are we seeing? Well, right out of the gates, we're seeing like this occurring. So the sell-off happened, and now we're starting to just kind of flatline. So it's like a bouncy ball. Bouncy ball went ding, 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 ding. Okay, then it starts to like normalize, right? And then the bouncy ball does what? Rolls for a while, stops. Now, in this case, it's gonna have to pick a new direction. So what you're looking for after an extreme amount of sell-off is you're looking for the market to pick its bottom and start to form a pattern, start to form a base, start to tell you, okay, we're done. And that's what we get right here. So the first thing we can see is, let's do a little curvy curve. And then copy that, bang, bang. What we got here, you'll be able to see it on lower time frames when we zoom in, is we've got our low. Smaller, there we go. We got our low right here. Then we got a series of higher lows that have occurred since. And that's what we're dealing with right here in this candle that we're in right now for this week, is higher lows. So that tells us that we're at least getting close. If we look at momentum here, if we look at our oscillators, which this is just RSI, and this is custom MACD indicator, but you could use the stock MACD indicator. What we're looking for is, let me explain this. This is up above the midway line, right? It all operates off this midline, like right here, yeah? Where my cursor is. And we've got positive islands and we've got negative islands. I think this is the coolest way to describe it. And we've got darkness of color on this histogram in size. So the darker the color and the taller the part of it is, the stronger the move, right? And then the color starts to fade and the size starts to get smaller, and then we slowly come back down to the midline and cross over to the other side. What we're seeing here is nothing significant on a weekly. There's nothing there yet, okay? This is looking flatlined, okay? Where are we at here? I gotta move my screen in my chart. Let's bring up this guy, boom. This guy right here, this madness, is VPVR. So visible price, visible range. So usually you get, whoops, that's Polynex. Nope, didn't want that one. That's the HEX chart. We got this one. So usually, let's pull this up here. Come on, there it is. We got volume over time. Volume over time is what this is, okay? This is different. This is volume over price. So what this points out to you is this points out support levels, areas of significance. And think of it more like, instead of trying to draw and define these specific lines, right? Just think of it in small little ranges and layers, okay? That's a better way to look at it. So the first thing that should be obvious is we're gonna talk about the two pieces to look at with visible range. Big ones and small ones, okay? Big one right here, and this is this red line flows with this. This is called the point of control. Just means a lot of volume in this node. And the small ones, which is right here. Coincidentally, right around this line that I've got drawn, I'll explain the lines. This is an important line that I drew out because it acted as the ceiling or top for this previous move before it broke out. And so understand that a level can only be tested so many times before it breaks out or breaks down. So it's usually 3 touches. But if you get 4, 5, 6, then just understand that the strength of the move is gonna be that much greater, okay? All right, let's continue. So if we're looking at downside targets, if this fails, like it's rejected here, right? Maybe some fib levels are coinciding here, which they are, and we'll talk about those. So let's say this does, let's always look at worst case scenario. It kind of fails here, tests it again, and then breaks down, right? This is your next area of focus. You can see it clear as day. That's what we'd be looking for. So you can have dry powder ready. You can have layers, bids stacked in and layered in, but this would be it. And it would be this whole range. So it's from 8 cents to 10 or 11 cents. And that's it. And that's this range right here, which I had this marked out before this volume had even been created. I had this marked out from this move right here. So as this move was happening, we had this little wedge or flag pattern. It's just basically a descending price pattern. And as this was happening, I carved this out as an area of significance, and it's still continuing to be that now. Make sense? Okay. Visible range, we talked about that. And now let's start to go down on our timeframes. Okay, so now let's go down to 3 days. All right, so here's the 3-day. Everything becomes clearer, doesn't it? This whole down move, descending pattern, descending wedge, right? Becomes clearer. You can kind of start to see that move for what it was, right? Becomes real obvious, like when it broke. And because if we jump down onto lower time frames, we'd be able to see what's called a break, hook and go, or a break and a retest. Here, let me explain that. What tends to happen is when a level is tested either up or down, kind of goes like this. Hits it, falls back, recovers, recuperates strength, then breaks above it, comes back down, retests that, and then takes off. So what we're looking for is that right there, that circle. So this is a break, comes back down, hooks, we hook the fish, hook the line in its mouth, right? And go. Break, hook, go. Break the level, come back, retest it, hook it, go. Make sense? All right, so that's another thing to put in a little tool bin, okay? And we see that happening time and time again. Break, hook, and go here. Where's another one? There's probably some within this structure here, right? So it happens all the time. Look at Bitcoin chart, you can find it anywhere. So the other big obvious thing that we're looking at here is a double bottom or W bottom. That's a reversal pattern up. The inverse of that is an M, usually a top pattern. No way it could be that easy. Bro, it's that easy. These patterns play out even though they're obvious. Head and shoulder patterns play out even though they're obvious. Wedges, flags play out even though they're obvious. Everyone can see them on multiple time frames. Doesn't mean they're not gonna play out. Still play out. Okay, so we've got this W bottom or double bottom kind of forming. Understand though that it could come down and be true and tag the very bottom right there. And that would be a true 100% double bottom, right? But it might not, and oftentimes it doesn't. So this might be it right there. So try it again, try to dip that back down into that area, grab liquidity, couldn't quite make it down to this low volume node. Low volume nodes tend to get tagged with wicks because there's liquidity there, right? And so it tends to go down and tag those, right? Anyways, here we are with that structure. Now we're on a 3-day, right? What else do we start to see here? Ooh, let's go down to our oscillators. And we see some big hidden bullish divergences forming. I'm gonna save that for another time, divergences. We'll get into that deeper. But these played out back to back to back while this big uptrend was happening. So nothing stopping it from another one forming and another either bull div or hidden bull div from forming. We're just gonna have to wait and give it more time. This indicator prints after it's already been done, but you can see it forming and you can draw your own lines, so it doesn't really matter. But the big thing that should be looking you in the face, wow, what's going on here? This island looks like it's really starting to turn, don't it? So we hit our worst, our peak here, and now the color's getting thinner and the size getting smaller. Almost like it wants to do something like this, right? Maybe we do one more day, and then it kind of breaks over the top and starts to do, and does its island on the other side. Because remember, let's look back now to Bitcoin. Remember this? How can we make an all-time high with just such small volume? That's going to come into play in just a couple minutes. I'm going to bring that up again, okay? So keep that in mind. So anyways, yeah, it looks like it wants to kind of peak and go the other direction, doesn't it? We see the tides have turned a little bit, and it looks like negative momentum is waning, meaning it's changing almost over. All right, one-day chart. I want to break down this last move. I want to explain this whole last move. I got some charts and some stuff that I was taking note of along the way as that was happening. And I got a bunch of lines that I deleted. So, okay, we'll talk about that. But yeah, so now this whole move should look more clear, right? There we go. All right. This could be way smaller. Right? Low, higher low. Okay, let's get rid of those because they're ridiculously big. And they don't matter. All right. And again, it looks like if we look at this thing on a daily, you really start to see it. It's like a bouncy ball, don't it? I made this pattern up in my head, by the way. And so it was perfect, like downtrend, sell off. And now we're starting to like kind of normalize, right? And so it's like lost its momentum, and now it's looking for a new direction. Which, after things go down, and it's, the sell pressure is exhausted, they tend to go up. Okay, so here's a look at your oscillators here. Nothing really too significant. We've got, oops, move this up, get my trend line. I got this little guy forming. He's looking pretty good. Oscillators are ticking up while price has been pretty flat and slightly ticking up. So a little bit of convergence, bullishly. Okay. This bear div played out, looks like. That was this right here. And really nothing here. And again, here's a closer look at your oscillators but your volume profile at this point. So now we're starting to make a lot of significant volume here. And this is kind of acting as our floor. Ground floor, right here. Ground floor opportunity, get in now. So let's get rid of, get rid of that guy. Let's get rid of this. Yeah, this is a POC, point of control. Lots of volume here, right? All right then. And this is looking pretty solid so far. We're starting to actually get a pattern. It's looking exhausted. It's looking like we're ready to move in another direction, right? Pretty obvious stuff we've shared so far. Let's go back in time now. How is this? How could you see this? Well, first off, I defined this range by slightly stepping outside of the wicks. Wicks are not always the most accurate thing to measure off of. So if we were to measure from this wick to this wick though, we're gonna get because I've now picked my top and bottom, that's created our range that we were in here. And if I were to go from wick to wick, funny things start to occur. 50% on a Fibonacci line is Dow's theory. So Dow's theory is not a Fibonacci line. It is just 50% mean reversion theory, which just states that after something extends, then it will revert back to 50%. And what do you know? The funny thing is that 50%, now let's get rid of the fib for a sec, coincides with how we failed to come back and close above that, doesn't it? Okay. So now let's explore this whole move here from a volume standpoint, because this volume definitely gets interesting. Make this a little smaller. We had a lot of action going on here. Almost looks like a little head and shoulder pattern, doesn't it? Okay, price came up, broke, made all-time high, failed, right? And so this is what I was talking about. So now it comes up, tags this brand new level, which psychological number, 48 cents, got front ran, 50 cents. Okay, breaks, falls back down, needs to rebuild momentum. So look at this. From a momentum standpoint is, oops, bring this back. Okay, sorry, I wasn't on screen there. Okay, so we broke out, tagged 48 cents, so it was front ran, 50 cents. Oh, I did 49 actually. So 50 cents was front ran. Everyone sold off thinking, oh, that's it. That's the end of it. Okay, sold back down. Momentum had to correct, had to reset, run up again, break through the level. And what you would be looking for here for this to continue is, first off, you'd be looking for break above, hook, go. Never happened, did it? But also too, we'd be looking at, because it's never just one thing. These are just puzzle pieces, okay? TA is not supposed to be anything other than puzzle pieces. The more puzzle pieces you have that line up gives you more conviction in a direction, okay? So we would have had to have seen momentum change. Now we had hidden bulls hitting on the RSI, which is kind of hidden, so there it is. So there's your bear div hitting there, which was the sell-off. We had all these underlying hidden bulls though, right? Which is telling us that it should be still going up. Now, when we compare that to another oscillator, we see that that's actually not a true story. So momentum had already flipped on us. So now we go and we hit our all-time high. Look at where momentum is down at the MACD. Not where we need it to be, and not even positive, nothing there. And again, we see the same thing here with this complacency pump, but we got a little bit of a green island on Bitcoin. So I'm just using this as a comparison. All-time high, how is it we got no momentum? RSI was already turned over. So this was way more obvious and it happened much faster. If we look at HEX and how long that took from all-time high, because this market is so pure, so new, it's so small, it's very easy to read and it moves a lot slower than Bitcoin. So it's lagging behind Bitcoin in that fashion on how long it takes a move to play out. Okay, so now it's sold off. Now we make all-time high, but there's no momentum there. We get a sell-off again, and we again touch and tag that bottom. So we tested. So here's one, here's two. Now we've tested that twice, okay? Remember, 3 times and it breaks. So here's number 2. Here's supposed to be 3. Never broke above, did it? So it got front ran again. Okay, now what starts to get interesting, and again, this is over days. You could have tracked this over days and saw this happening. So now this 50% line is starting to play its role and be important, because now we're like this people got excited again about, okay, we're back, we're good. Bang, we had a square up and it just basically matched with sell pressure. Square up is this right here. Let me tag it in case you can't see. Everything's still on screen, yep, okay. My screen is so big that not everything is always on. That's a square up, right there. So equal parties traded hands here at this price level. So it's a significant price level. And those levels are tagged again and again and again until they're filled. It's almost like a CME gap. CME gap used to be a huge meme with Bitcoin because gaps get filled, right? All right, let's continue. So that should have been the concern right there. Now, hold on a sec. Let me pull up my charts. Okay, so here, okay, let's open up the original. Got the first one. Let's open up the second one. And the third one. And I guess you could say I told you so. Get my street cred, right? Okay, let's go back to the beginning. I shared this. Can we see this? Oops, I'm gonna go back to this. Oh, no, we cannot. Let me move the chart back over for the timestamp. We gotta get the timestamp so I can get that clout, right? October 5th. There it is right there. Seeing it right there? Okay. So, what was my commentary here? Not much has changed. We had our kind of level defined, right? And what was I seeing? Okay, so some divergences starting to play out, but I was starting to get concerned here. And so that's why here we are on the 6th. Uh-oh, not looking so good, right? So we're failing to break the 50%, the midline, and now we're starting to sell back off. So I was immediately looking at this level to see how it would react at 35. And on the 8th, I was like, okay, this is not gonna work, guys. So now I saw that this first one came up, couldn't even retag and reclaim over the 50% line to make our way back up for third tag here to break out, right? Couldn't even do that. Now it can't even come up and tag like essentially what was starting to be the bottom of this half of that range. Now it can't even break above this. It's gonna sell off. It's gonna sell off, guys, on the 8th. And then here we are November 8th, a month later, to show the whole thing as it played out. So here's the rejection on the 50%. Here's the rejection on the on like this green line I had drawn here, which square up here, close to these two square ups. I had a lot of action here, right? So, okay, failed there. Blue line is the next target, and I don't know why I would just stop there, right? So we start to really think about, okay, shorts. I mean, and a traditional trader would think like that. I can't even help but saying like that too. That's funny. So yeah, you would start thinking of shorts typically in that market, right? All right. So yeah, then we come up and we attempt to tag this. Again, kind of like the bottom of this range, which again, it's not this exact line. I just want to make that crystal clear because we get so wrapped up in definites and exacts. It's more like this. Screen's running a little slow for some reason. It's more like this right here. So look, we come up, we try it again. Nah, don't think so. Create this little square up right here. Bang. And then the sell-off really takes off, really escalates at that point, right? And so all of that, not really much significant happening here from a volume standpoint, except for the fact that we saw this divergence happening right here. Look at that. Islands are getting smaller and smaller, okay? And then we flip. And this, believe it or not, this was huge actually, this right here. This was 91% reclaim from the bottom. That is huge, right? And that is what said, okay, enough is enough. Bottom's in. Are we at the, okay, let's go top to top. Okay, exactly. 96. No. Oh, my mouse is being stupid. 95 or 96%, okay? So then that was like, okay, now we're starting to see something in, something actually changing, showing us that there's a change in momentum. And now what do we get? Okay, slowly fizzled back out because we're on a daily chart. So remember the significance there. When we look at a weekly chart, we're seeing moves by the weekly basis. When we're on a three-day move, so that's like what's ahead in this week. Weekly is like what's ahead over this week and some, right? 3 days, like what's ahead over the next couple days. 1 day is, again, pretty similar. What's ahead over the next couple days or day or two, right? So that's how you want to look at time duration. Time duration is everything. It's like if I go out and make a statement, HEX is go to $100 or whatever, or Bitcoin's going to $1 million. Well, if I'm talking about that in 20 years and I don't disclose that, I just look like an idiot, right? And there could be all kinds of dumps, down to oblivion in between now and then. So that's, again, the difference between an investor and a trader. And so right now, traders are winning because nobody really wants to be in this market long term. We've got Elon Musk and Jeff Bezos selling record high amounts of Tesla shares and Amazon shares this year. So you're telling me the two richest guys in the world are selling stocks while everyone else should be buying from a long-term holder investor position? I don't think so. Now, the good news is with HEX, it doesn't matter. If you're not getting paid out for like 10 years, 7 years, 15 years, then who cares what the price is doing today? What you really care about is the price when you go to cash out, right? That's what matters. And if the price is down that day, well, yeah, then we can complain. But you've got a longer term perspective, longer term time duration that you're looking at this thing. Does that make sense? Whereas most people don't. And there's an argument put forth the other day that's like, okay, who's buying this at this level? El Salvador bought now on this last dip on Bitcoin, and so did Michael Saylor, again, bought the dip. Okay, who else is buying? Like, you're telling me guys are coming in right now buying 57, 53K Bitcoin for like the next 10 years, 20 years? Maybe, but probably not. When we're seeing all these other indicators that we've got a soft, undecisive market right now. The infrastructure bill did not even, pump like it should have. Because the more you do something, there's only so many times that old trick is gonna work, and then it stops working. So we can only print tons of money so many times and have that drive the markets up before it starts to drive the markets down, yeah? So that's what we start to see happen now. It's like, who's buying this market right now for the next, 10 years? Or 5-year move, or 100x move? Like, who's buying this for a 100x move? I don't know, man. Suckers? Nobody? Right? So again, with HEX, who cares? Because you got plenty of time. You got plenty of time for this thing to go down to a penny and then go back up, if that's what it's going to do, right? But after a while, it starts to stop having such dramatic dumps like that. And as the price goes up, the percentage basis of move is smaller based on the dollar amount, right? So like now with Bitcoin, it's like, a $2,000 move is like, a couple of percent. I remember when that was like, we were scalping and making all of our money off a $1,000 move, $500 to $1,000 move. Well, now $1,000 moves happen in a day. And so the percentage basis of that move is now smaller. It's considered less because of the price of the asset and where it's at in this point in time. Make sense? We don't really have much else story-wise happening there. We've explained that. We've explained the basics of oscillators. They are just basically momentum. We've shown you the volume profile and how to really execute that. So let's look at some more fibs here and talk about outlook. I think that's everything I had. We explained this whole move, compared it up against Bitcoin. Yeah, man, pretty easy stuff, right? The issue with technical analysis is that it's much more to do with your beliefs and your woulda, coulda, shouldas, and it should do this, and I want it to do that, and this is my bias, so it should behave that way, versus actually what's going on, right? So now let me go through fibs really quick. So there's some levels on this. You're gonna see them all the way. Can you see all the way to the right? Nope, let's move my screen. Boom, there it is. Okay, we've got 236, 382, 50%, or 5-0. That's Dow's theory, not a Fibonacci line. 618, which is the golden retrace, 786, 886, and then 1, and then it goes from there. 16, 126, 36, etc. Okay, so 236 is a very shallow retrace. 382 to 50 is considered moderate. Golden retrace, 618, and then deep retrace, 786, 886. So now, all we've done is we fib from the top to the bottom. And what do we got? First off, so we're assuming this is our bottom. Notice how this 95% move went right back into the golden retrace zone, right back in there, and then it sold off. That's a good retest. That's a good thing. Now, what's occurred is it tried to, it basically tested and sold off again at the 786, and it's floating around and trying to break back through the 886. Understand this. If this cannot break back above, like this area here, okay, this little boxed in area, all right, come on, right here. Break above and close above that on a daily, might go down more. Or it's just going to take more time, right? So this might take time to play out. It might literally just sit in this little condensed fashion and just making nothing moves. Here, 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 and then finally, bang. Okay? We're just going to have to, like, all we're dealing with is data in front of us. Our job is to look at the data in front of us, yeah? So, yeah, if what you're looking for is that if this continues to fail, and then, okay, this is point of control, so you'd probably see some interaction there. Why is this not? Try this again. Too zoomed out. Zoom in a little bit so you can see the depth of my squiggles, okay? My very scientific squiggles. Okay, let's zoom in here. That's better. Okay, so now, what if we see something like this? Like it doesn't really test, it comes down, and then we start to see this, yeah? Well, what we're looking for here is we're basically looking for it to fail, reclaiming the 886, and if it breaks down and then retest that and then goes, so break, hook, and go, but the other way, then what we'd be looking at is we'd be looking at this downside target that I told you, which is right down here. So this green box coincides with this green box where all that low volume was between 10 and 8 cents, right? So the break, hook, and go that we'd be looking for the downside would be that. So let me draw this a little bit better. It'd be like this. So here's our line. So it's break above, come back, retest that. So there it is. Set the hook in and then go. So there it is right there. Okay. Okay, so that's what we'd be looking like for the downside. Break, hook, and go, right? And for the upside, you'd be looking for something like this. To kind of break above here, come back down, retest, go. Break above, hook it with the retest, and then go, right? And that's it. That's all I really wanted to share with you. We kind of touched on fibs a little bit. We've touched on a lot of different pieces that hopefully help you get a more complete picture of what's going on. Now, you don't really need to look at this stuff daily. You don't really need to look at it maybe once a week, right? And you're just trying to figure out what's going on with sentiment. You could be paying more attention to macro sentiment, which I think would be smarter than something like this. All right, so if you enjoy this, or if you just want to help with the algorithms, comment below, like as well. If you got questions or specific things you want me to cover, deeper into pattern stuff, maybe we can get into that stuff. I don't think that would even really be beneficial because you're not traders, you are holders and investors, right? With a longer term perspective. So this stuff, that's why we're going to start with the basics. Anyway, let me know what you think of this. Love to hear your feedback below, and subscribe, hit the bell notification, be on the lookout, more videos dropping soon.